Good morning, good morning, good morning, good morning. Good evening, good afternoon, depending upon where you are in the beautiful world. Thank you guys so much for joining us here at TradeDelicious. Super excited to get things started with morning coffee. I do not have coffee. I have an energy drink because I don't know why I don't have coffee. Maybe because I'm American. No idea. Either way, welcome in, guys. We're just going to hop in and take a look at a couple of charts, get ready for our trading day, see where things are at. Please go ahead and throw in the chat if there's anything specific that you guys are interested in me taking a look at. I'm just going to take a look at the major indices, take a look at some of the major Forex pairs, all that fun stuff, and we can get things crack-a-lacking. So to start things off, as always, I have a tendency to start things off with, the S&P 500. As you guys know, I'm a futures traders, so I pay really, really close attention to the indices. We're seeing a little bit of a sell-off here. It's the same thing that we were seeing a couple days ago. I mean, so much of it is connected to the performance of Apple. So that being said, we're seeing a little bit of a sell-off because Apple's finally seeing some weakness. We're also seeing some weakness from names like Microsoft. Tesla is one of the only ones that's doing incredibly well off of some production numbers that don't necessarily make sense. It's been an absolutely wild situation. One thing that I thought was very interesting is the dollar is finally catching a bit of a bid, slowly but surely. We're not sure where this thing could go. This thing could continue to the downside, but this has very, very important bearing on what we could be looking at for some of the major forex pairs, some of the major currency pairs. As you know, of course, as the dollar gains strength, we expect that the euro dollar, the pound dollar, sees a little bit in the way of weakness. But with some additional news out of the Euro Central Bank, as well as the Bank of England concerning their fight against inflation, I would expect things to continually gain strength for those two currencies. Hi, Barbara. Good morning. So what I'm thinking is, the ECB raised rates. The Bank of England recently got their CPI data, which I actually have not checked as of yet. I'm just starting turns to lower as elevated UK. See, this is what happens. So basically, we're seeing here Sterling turns lower after brief gains after exceeded expectations. Annual inflation was unchanged at 8.7% on year in May, while core inflation accelerated to 7.1% from 6.8. Let me translate that for you guys real quick. Inflation bad. Inflation really bad. The Bank of England thought they were doing a decent job. They raised rates quite quickly. They tried to respond quite quickly. They didn't do things quick enough. So the fact that core CPI is rising as quickly as it is, that means that from an economic perspective, you're going to see a lot of things go up in price for the average Brit, which is going to respond in a weakness in the pound. At least it should fundamentally. Technically, as you can see, I say all that after we've made new highs, and these highs aren't just new highs, these are the highest highs of the year. I mean, if we look at the performance from the 16th, we haven't been this high all year. Part of the reason why we're seeing this sell-off is because, of course, with the pause from the Federal Reserve, we've seen continuous weakness in the dollar, so we would expect certain currencies to perform a little bit better against the dollar outside of things like the Japanese yen. The Japanese yen is another whole can of worms. But the Great British Pound may see a real acceleration in the ask side of this currency just because of the fact that they don't have inflation under control like the US does. They don't have inflation under control like the ECB does. There are a variety of reasons for this. If you try to watch Parliament, you'll see people make arguments that they should have never left the Eurozone. You'll see people make arguments that they should have been more focused on fighting these types of issues as opposed to the infighting and all of the prime ministers. There's a lot of reasons for this, but the core of it is there's a real fundamental reason to be looking at shorts on the Great British Pound. Does that mean I think you should do it? Maybe not. I would wait for some type of confirmation. The fact that we've had 3 days, 2 days in a row, where we have red bars. Today is shaping up to be a red bar as well. I generally speaking don't like to get into longer term swing trades when we have so many bars in one particular direction. I think that just exposes me to unnecessary risk, but to each their own. Barbara, if inflation is bad, why does this cause the euro to go up or the pound to go up? So you have to remember, of course, that the pairs are interconnected to the economies, but there's also some technical aspects. So from a fundamental perspective, let's talk about one that is super clear. Pound dollar, right? We were talking a little bit about that. Inflation has been accelerating for England, right? So as we see inflation accelerate, we see the value of the British dollar fall. That's the definition of inflation, right? Inflation means that the value of something is becoming inflated, almost like a balloon. It's not real value. Like the best examples of inflation we can think of Germany after World War II. They had to produce hundreds upon thousands of francs in order to give people enough currency to buy bread. Bread went from being 5 francs to being 5,000 francs. That is hyperinflation at its core. The same thing is happening here, not to the same degree, but as inflation accelerates for an economy, we see the value of their dollar fall. So naturally, we see the numbers for CPI come out and unfortunately beats the forecast that economies had for it, and we start to see some weakness in the pound dollar because the Great British Pound is losing value. Although the dollar is also losing value, the fact of the matter is here in the US, we have done an objectively better job at fighting inflation. Our most recent CPI numbers put us a little bit closer to 4% for CPI, whereas for Britain, it's double that. So that's one of the reasons why we're seeing that. Wilco says the pound is going to come crashing down hard very soon. We will see, my friend. I'm always very cautious to make very clear-cut calls. As traders, I'm always focused on what is the most probable thing. It is very possible that the pound does not catch a bid and it falls straight through. I mean, if you look at the basic analysis, there's no reason why it doesn't fall through this $1.23 area, or maybe it gets stalled up here at the $1.24s, but it absolutely could fall through there, and we could see very easily a few hundred pips in movement. But as always, you have to be cautious. You don't know what could happen. All it takes is one piece of good news from the pound or one bad piece of news from the US to turn this chart around. So I always encourage people to be careful. And then Barbara said, "Okay, that feels more realistic." Okay, I'm glad. I'm glad that makes sense to you. Wilco, their supply at 129,540, and I think from that level we see a massive crash. 129,540. You're talking about, so that has to be from a while back, right? 540. I see what you're saying, up in this area. Yeah, man, I don't know, brother. It's really tough to tell at the moment. We have to really, like you're saying, wait patiently, wait for some type of confirmation, and then hopefully hop in. Are most of the people here day traders? Are most of you guys swing traders? I do a lot of analysis from a swing trading perspective, but if you want me to dial in, I absolutely can do that a little bit more. And he says, in Germany was no franc but the Deutschmark. Exactly. I'm so sorry. I was thinking of the French franc. I was just trying to throw an example out there. But exactly, the Deutschmark was something that experienced a really horrible hyperinflation. We saw something very similar in Venezuela. It's all the idea is, as a currency becomes more plentiful, it becomes less valuable. There you go. So that's the big thing happening with the British pound. The ECB shouldn't have too much in the way of news coming out, but those are the biggest things for those assets there. Wilco says he does swing, but he scalps daily if the market provides setup. So congratulations, man. I don't know how you do both, brother. I've really been struggling to scalp in this market. I've really been focused much more so on the swing side of things. Is there anything specific that anyone wants to go over? If not, I'm just going to go over some of the hottest things that are hitting as of late. I always really love talking about oil, for example, just because we've been in this area where we've just continually touched this area of support, and we've been unable to break out in a meaningful way. I really do believe that if we can catch a bid in oil, we'll see this thing run. But again, there are a lot of fundamental challenges that we're seeing with the oil market. Demand isn't very high from very important economies like China. So a catalyst for something like this to move is going to be intense demand or intense buying from a country, from some kind of large economy, say the U.S. purchasing oil for their strategic reserves, for example. Gold down ranging, that's a great question. Let's take a look at gold. So gold is one of those assets that, as Warren Buffett would say, has fundamentally no value. Technically, the only thing you can lose gold for is it's a half decent conductor. Outside of that, it is just shiny, right? So we've obviously had this triple top that we've seen that happened first in 2020 and then happened earlier this year, and we see that again in April. In my opinion, man, it depends on what you want to do with this market, because over the past few days, I have to say it's been ranging since the end of May. I haven't been touching gold since the end of April. It hasn't really provided many interesting setups for me. But from a fundamental perspective, you have to remember that as the dollar falls in value, usually gold catches a bid. The reason why it's not been catching a bid is because fundamentally we're still sitting on our hands for a lot of things to happen. What does that mean? Well, the dollar right now is a very safe currency by virtue of the fact that the Federal Reserve is very willing to continually raise interest rates, and they've proven that they're very willing to raise interest rates. So what's smart money doing? A lot of smart money is getting interested in T-bills. So we see a lot of people purchasing treasury bills, treasury notes, that sort of thing, and that has pulled money away from other assets, some of those assets including gold. So I don't know what's going to happen with gold, what kind of catalyst is needed for us to get out of this range. But as I see it right now, we're in a range. If we break below this wick from the 15th, we can start having a different conversation. And then, Wilco says, that's the thing, gold's hurt me this month because there's no clear direction. Exactly, man. I would be very careful trading this thing, and if you're losing on it, you might want to cut it from the plan for a little while. I was loving gold a few months ago. It was very clear to me where things were going, but as soon as things get money, I try to step away from the product. Let's see if I missed anything. One milk went up from 1 mark to 10,000 marks, just for info. Thank you so much for that, man. Exactly. That's the exact story that I was trying to tell in terms of the issues of hyperinflation. But yeah, that's gold. The commodities sector right now is in a really odd position for all of the commodities that are the most popular: gold, oil, silver. There's going to have to be some kind of catalyst that kicks us out of these ranges that we've been seeing in the past few weeks, past few months. One thing that we can depend on for some kind of movement really is in the equities markets right now. As I'm sure you guys know, I've beaten this horse to death. There's really not much market breadth in this run-up. Usually when we see a indice have this kind of strength. I mean, we're 20% up off of the lows of October. Usually, when you see that kind of run up, you're seeing several hundred companies participate in that run up. And what I mean by that is you're seeing several hundred companies that are producing decent returns in the markets. By this time, they would be up a couple percent, for example, 3% on the year. We're really not seeing that. We're seeing 7 companies hold up the whole of the market, and all of those companies are tech related. So, one thing that could serve as a catalyst for things to move in one direction or another is if we start seeing investors taking some profits on these crazy moves that we're seeing in assets like Apple, on these crazy moves that we're seeing in assets like Microsoft. Microsoft did have a small hit against them. If you guys were here for Daily Donuts, I'm not sure what time zones you guys are in. I talked a little bit about it on Monday. But on this past Friday, there was an issue with some cybersecurity attacks on Microsoft's products, specifically Microsoft Teams and Microsoft Outlook. There was some exposure to some kind of cyber attack. That's one of the reasons why we're seeing such an aggressive down day in Microsoft this past Friday. But the fact of the matter is, Microsoft is such a robust company. Apple is such a robust company. You know, you have to remember, we talked about the Bank of England and how their decisions really affect the world. You have to remember, Apple is worth more than the entire economy of the UK. The entire economy of the UK produces a GDP around 2.6 trillion. Apple's market cap is at 2.7 trillion. Take that for what you will. But as we see these particular products do better or do worse, it has a very large bearing on a collection of different assets. So I always try to encourage people to pay close attention to the Apples, the Microsofts, even the Teslas, because Tesla's another one that's really holding up the market. If some catalyst steps forward, if we start to see AI cool off, for example, then companies like Nvidia, it may close this gap. That may cause the market to fall in a direction that makes sense, that may finally give us the pullback that we're looking for in something like the S&P, that may give us the pullback that we're looking for in other assets as well. You have to remember, although we often talk about the S&P 500 and the Nasdaq as the indices, there are other indices. The Dow Jones is not as heavily weighted from a technological perspective. There are only 30 companies in there, only a couple are tech. And so that's one of the reasons why we're seeing this action where we have these really, really, really resistant areas for assets like the Dow Jones. It's struggling to get through because most of the assets, most of the companies that exist within the Dow Jones are unable to perform to the same degree as an Apple, to the same degree as a Tesla. Netflix is another one that I just like to take a look at it. This is, in my opinion, absolutely astronomical. It blows me away that we've seen this much movement from a company that has had lackluster performance, but hey, it's where we're at. So let's take a look at a couple other assets just so we can get a more complete look at the market. One thing I like to do, and this is just a part of my trading plan. I just got off of a call with Saul Collier. He is the CEO of the Fivers Group, an absolutely amazing human being. That will be posted a little bit later next week. But he talks a little bit about, following your trade plan and making sure the things that you're good at are things that you're really capable of sticking to, and that you have a discipline in taking a look at those items. For me personally, one thing I'm constantly doing is taking a look at the VIX in order to determine how big or how small my targets need to be. So regardless of what asset I'm trading, I really only trade 3 assets. I trade futures, ES, oil, CL, or NASDAQ. But say I'm looking at an options trade in something like gold, or I'm looking at trying to short the euro for whatever reason over a 30-day time frame. One thing I'd really try to look at is the VIX. It's an example of what volatility is looking like from the perspective of the S&P 500. And let's face it, the S&P 500 is effectively the US economy. Right now, there's really not much volatility. So if you're starting to see some issues with your trades, if you're starting to see some trades that used to be these big runners a few months ago, or that produced these crazy returns in the pandemic, you have to remember that at that time, the VIX was much higher. Look at where it was just in May. We're not even talking about what happened in 2020. In 2020, we saw this thing, pop up into the 50s, the 60s, the 70s. Now, we're seeing the VIX down at the 13 halves, the 1360s. So we're seeing much less movement in these markets. A part of the reason is because of course, we have a general understanding of what the Federal Reserve is doing. By the way, Powell is speaking later today. Please be careful around 2 p.m. Eastern. But he's made it incredibly clear that he's waiting to see if the interest rate hikes have a pertinent effect on the markets. We're also seeing a lot of big traders, a lot of big investors step away from the charts, sell in May, and go away. The only reason why I'm here is because Jordan did that exact thing, and he's hiking through Europe right now. So keep in mind that if you're not finding as much opportunity, or if you're struggling to find opportunity, remember that the opportunities are not going to be as exciting right now. This is the definition of summer trading. This is a great opportunity for you to practice your patience and practice only taking those A-plus setups, which unfortunately means you may not get a trade every day. Right now I'm trading a couple days a week, not because I'm not looking at charts, but because those are really the only setups that I'm able to find. Please go ahead and throw in the chat if you guys have anything else that you would like me to take a look at, any particular questions about your trades. I'm here to help. I'm super excited to be here. So that's the VIX. I just want to talk about that a little bit to give you guys a better understanding. Another asset that has been exciting me as of late, because I think it's a really good example of what IPOs look like. A lot of people have been getting really excited about this new IPO in Kava. Kava is basically a Chipotle lookalike, but they produce Greek food instead of Mexican food. Take a look at how crazy this chart is. Remember, if you're ever trading a newer asset, if you're trading an IPO, you're trading a currency that just was introduced onto a platform, think Bitcoin, right? You're going to see a lot of volatility. This is ridiculous. It opens up at 41.98. We're now trading at 38.57. This type of volatility is not what you want to be involved in. So anyone that was thinking about trading Kava, I would be very, very, very cautious, especially because this is a company that is a restaurant chain that didn't even make money last year. They lost $59 million before stepping up to the plate and joining the New York Stock Exchange. Let's see. The only other assets that we really didn't take a good look at were things like Intel. Intel's another one of these companies that is trying to catch a bid and has struggled to do so. As I'm sure you guys know, we've talked about this a lot. Intel has been trying to take advantage of the AI run. They've been trying to take advantage of all the AI madness that's happening, and they've simply been unable to do so. They produce a lot of the GPUs for NVIDIA. We did see a beautiful run up for a few hours, and then things went against them this past Tuesday. What are you gonna do? A lot of people have been interested in trying to trade this thing. Me myself, I am looking to pick up some shares for my long-term portfolio, but this isn't something that I'm day trading. I mean, look at how volatile this thing is. If you're looking for opportunities and you're interested at all, maybe this is something for you. It's really not something for me. You know what? Might as well look at the Mexican peso. I always like to talk about Russell's trade. Here's the trade that he's been short on for weeks. Congratulations again to you, sir. A lot of stuff happening out in Mexico. It's a wild situation. One thing I didn't get to talk about as much is the dollar Japanese yen. This is an example of a very, very, very resilient pair. The US dollar has historically performed incredibly well against the Japanese yen. What are you going to do? So even though we did get this news of a pause, which means that the dollar will lose value and has lost value since that announcement has been made, we have seen the Japanese yen, the dollar Japanese yen, catch a bit of a bid. We could be heading into this double top here. If you guys get some type of confirmation for your strategies, this might be a really interesting position to be swinging to the downside. But I'd be very careful by virtue of the fact that this guy has had a beautiful run up. And from a fundamental perspective, there aren't too many reasons why we see this thing pull back. Either way, please be careful. We want to be as cautious as possible while we're doing this. Robbie, what's your trading strategy, brother? So for me personally, I look for weakness in markets that are strong. I look for strength in markets that are weak. So that's my bread and butter right now in terms of swing trading. Most of my opportunities are looking at areas like, for example, this is an example of something that I would be considering if I traded Forex on a daily basis. I don't, so it's not something that I'm going to trade. But say we have a market that is overextended like this. Why do I say it's overextended? Because this thing has been running since Friday, March 24th. Today is the 21st of June, and this thing has not even pulled back 50%. This pullback here is decent, but in my opinion, that is shallow versus the crazy run that we have here. So I like to see overextended markets like this heading into some collection of resistance, some collection of supply. I like to get some type of confirmation in the direction that I'm interested in this case, to the downside. And then I like to enter the trade on some kind of intraday chart. For me, most often, that's a 15-minute. So I look at this guy, I say, all right, I have some type of conversation. I dial in, I look at the 15-minute, I try to find that same level, and I try to get in on the short in this case after some strength and some momentum in some of these negative candlestick bars. And then I try to hold the thing as long as I can. I'm not super great at it. I'm still perfecting the swing trading strategy where I can milk the most out of each trade. But it's been working pretty okay for me. When volatility is a little bit higher, I do trade intraday. When I trade intraday, I'm trading things like oil. So for example, for something like this in oil, I haven't been doing it lately because there's so many fundamental issues with oil right now. But I would 100% be playing this range, for example, buying these lows, selling these highs. Establishing range intraday is something that I'm quite good at and I'm quite comfortable with in my particular strategy. But, you know, Robbie, when it comes to strategies, I always am cautious to give people too much advice because the crux of it is you have to find what you're good at and you have to be willing to explore that in earnest. My swing trading setup is not my scalping setup and vice versa. All right, guys, it is already 5:30. It's always such a pleasure to be able to talk these things through. Oh, Robbie has one more question. I'll go ahead and answer that. What about the stop loss in swing trading? Be out of the trade if it started to close above and break out in the zone above. Yeah, man. So for me, I know my statistics, brother. I expect more than 60% of my trades to fail. That's just where I'm at. I'm looking for pretty extended targets, so I'm used to almost 2 out of 3 trades failing. So in this case, for example, let's say I'm looking to bid this support area right here, and let's say I buy after this candle, right? Looking for, knowing my strategy, I'd be looking for extended targets up at 81. Again, this is something I would do if there weren't so many fundamental issues with the oil. So after this confirmation bar, I would buy in this guy, and I would have my stop loss somewhere in here based off of not the daily chart, but based off of my secondary entry chart. So I look at several charts. I look at the 15-minute, the 4-hour, the daily. So chances are I'd have my stop loss somewhere in this bar on the 4-hour. I would have my stop there, and then I would move it up intermittently as I saw momentum in the market. Sometimes absolutely I get stopped out because, traditionally you buy this bar, you put your stop loss right here. A lot of people get taken out on a wick just like this, and then it rips. You got to pay to play. It happens to me all the time. It's something that I've accepted in my particular trading setups. I really don't care. As long as I'm profitable, it doesn't matter. And then he says, even with ranging markets. Yeah, so in this case, in this ranging market, yes, I'm very comfortable with oil. I feel like I have a good understanding of the heartbeat of oil. But let's say it's something like gold. I am comfortable with gold on a longer time frame. We're talking about a few weeks, right? I don't know what gold's like intraday. I don't know its heartbeat. I don't know the pulse. So me trying to buy down here and sell up here would not fly with my strategy because I'm not familiar with this asset. If you're familiar with the asset, then your strategy is your strategy. Do what you do. If you're not familiar with the asset and you're trying to apply the same strategy that you've used on other assets, there's a possibility that you'll do great. But that possibility falls as you trade things that you're not familiar with. I always encourage people to get really familiar with what they're trading and understand it. Last question. Can you really get successful with trading, and is funded trader worth it? So Robbie, this is a long road, brother. That's a charged question, and I'll tell you why. I trade because I really love it. A lot of people same age as me, 27. I'm 27. They'll watch YouTube videos about some guy that's lifting, or they'll watch basketball highlights. I watch economic lectures and Nobel laureate speeches. It's really dry. It drives my wife up a wall, but it's what I enjoy, man. I'll be working around the house listening to some guy at Wharton giving a speech on this type of stuff. Is it worth it? If you like it, absolutely. If you love it, it's necessary. But if you're not in love with markets, there are a lot of ways to make money that are less stressful. Specifically, to accumulate wealth. True and honest answer, please, bro. So, absolutely, man. There are a lot of people that you're going to see on this channel and other channels that have accumulated incredible wealth. But 9 times out of 10, they really enjoy markets, and we geek out about markets. Like, to this day, something will happen with Amazon, and I will shoot Jordan a text just to tell him that Jeff Bezos has done something crazy, as if it was like the newest episode of The Bachelor or something. We literally gossip about markets. So you can absolutely accumulate wealth with trading, but if it's not something that you enjoy, you're much better off doing the long-term thing, buying the S&P 500 and holding over an extended period. Basically, bro, when it comes with the relation to if I put my time and hard work, can I make good money? You can make good money, absolutely. If you really love it. If you don't, you'll lose a lot of money and you'll quit because that's what most people do. In the interview with Saul, this is the last thing I gotta let you guys go, but in my interview with Saul, I talk about losing $1,000 in a day, and at that time for me, $1,000 was a lot. It was not fun to lose that money. He talks about a trade where he was down 14,000. Jordan will tell you about a trade where he was down 6,000. If we didn't love the markets, if we didn't have a passion for the markets, we would pack that stuff up and lock it away. My wife would much rather me do a standard business than do something where I can tell her I made a couple grand today or I lost a grand today. You know what I mean? So please keep that in mind as you move forward, man. Anyways, I've got over my time. I appreciate you guys so much. Thank you so much for joining us here at TradeDelicious. I'm super excited to help, and if you have any questions, seriously, I'll do everything I can to help you. Please throw it down in the chat. Please throw it down in the comments. But always, as always, please trade well today.